Hello, good evening, USA. Good morning, China. Good morning, India. Welcome to the World Today discussion series hosted by the UCLA Center for Global Management. I'm Chris Tang. As the faculty director of the Center for Global Management, it is a privilege for me to moderate today's event. Today's event is also co-sponsored by the Greater China Business Association and the South Asia Business Association. Over the next hour, we shall discuss with our panelists about China's digital yuan and India's mobile payments, as well as their implications for Asia as well as for the world. Before I introduce our panelists, let me say a few words about today's topic. First, China is the first country in the world to introduce the paper money during the Tang Dynasty in the 7th century. Well, 14 centuries later, China now wants to get rid of the paper money. In April this year, China launched the world's first sovereign digital currency. This digital currency is called the digital yuan, which is backed by the People's Bank of China. Now, there's no secret that China has the desire to dethrone the US dollars as the world's reserve currency. So here's the question. Will China's digital yuan become the digital cross-border payment system? Will digital yuan dethrone the US dollars? Next, across the border from China, India has declared war on corruption in 2014. To fight corruption, the Indian government made a drastic move in 2016 to demonetize small banknotes. Then, in 2017, the Indian government approved a new digital payment system called Paytm. Paytm means pay through mobile. In July this year, Paytm filed for a $2.2 billion IPO in India. Now, very interesting, India's Paytm is related to China's Alipay. This is because Paytm's biggest investor is China's Ant Financial. Now, this chain of events raises also the following questions. Will Paytm become as big as Alipay in China? But at the same time, will Paytm face a similar fate like Ant Financial if Indian governments were to tighten the regulations? To answer these questions, it is my great honor to have two experts to explain these two questions today. So let me introduce both speakers tonight. First, let me introduce my colleague, Professor Bhagwan Chowdhry. Bhagwan Chowdhry is the professor of finance at the Indian School of Business located in Hyderabad in India. He is also a research professor at the UCLA Anderson School of Management. Bhagwan received his PhD from the University of Chicago. Next, it is my honor to introduce Professor Michael Song. Michael is a technology venture builder and investor. Currently, he is the chairman of CarbonBlue Innovations. CarbonBlue Innovation is a cross-border technology transfer and venture building platform that is focused on blockchain, FinTech, and digital finance innovations for the developing countries. Michael is also the co-founding director of the Fudan Fanhai FinTech Research Center located in Shanghai. Michael received his BS, master's degree in engineering, and PhD from MIT. Welcome, Bhagwan, and welcome, Michael. Now, Michael, since I introduced you last, so I would like to start with you first. Well, I used to think money is money, but things are getting complicated these days. We have Google Pay, Apple Pay, Venmo, you name it, in the US. We're also cryptocurrency, Bitcoin, Dogecoin, whatever. And now, to throw into the mix, China has also the digital yuan. So I'm confused. Can you help us to understand what are the differences among all these things Over to you, Michael.
Thank you very much. Pleasure and honor to be here. Maybe I can just set the stage, right, by talking about a digital revolution, because this is what it's really about, right? So 20 years ago, we had the internet, right? The first digital revolution. And what we did was we took a lot of offline information, right? Whether it was in library books, or at the time we had computers, but the computers were not connected to each other. The information is very hard to get at. And we now digitized it, and we made it online, and we democratized this access, right? So these days, you go to Google, you go to Wikipedia, information is largely free, right? Before, the haves would have a very asymmetric advantage, but now it's given to everybody. And on top of that, we've built all sorts of new business models like e-commerce and Google's advertising model and Facebook, social media, and things like this. And the world has changed, right? It's 40% of the GDP of US or China these days, and then growing. Okay, so that is the first digital revolution. Now we are talking about a second digital revolution. Now, instead of the digitizing information, we are digitizing value, okay? Anything of value, okay? Real estate, fine art, commodities, capital market instruments like equities and stocks, anything of value can now be packaged in this kind of new, modern sort of tokenized form, okay, as a digital asset. And then the beauty of this is, in this tokenized form, we can exchange this value between, say, digital wallets, anyone with a smartphone, right? In a peer-to-peer way. You probably heard the word decentralized, okay? Meaning you don't need a centralized authority like a bank in between to handle this. It can be done in a very peer-to-peer way, the same way that MP3 files are exchanged by BitTorrent, that kind of thing, right? So that is hugely revolutionary, because when we're talking about value, we're talking about everything that is possible under the sun, right? And it could be something physical value like real estate, but it could also be something virtual like a person's future net worth, right? Imagine anyone now can attach, that to a token and be able to fundraise and to be able to create economies out of it and things like this. So this is the revolution that's happening right now. Now, you might have heard of Bitcoin, right? Bitcoin being the granddaddy of all cryptocurrencies, as they call them. Basically, the 9-page white paper by a guy named Satoshi Nakamoto, talking about using blockchain as this fundamental technology. You can think of it as next generation internet. We won't get into the technical details, but a new way for allowing these digital assets to be transferred and things like that. Now, what's interesting is in certain areas of the world, like in China, there already was mobile payments, electronic payments, things like that. In China, they're what we call the duopoly between Alipay, run by Financial, and WeChat Pay, which is run by Tencent. That was 96% of mobile payments in China. Okay, so largely in areas like China, I think China's taking a lead in this. Digital payments has already been around for a very, very long time. So what's the new thing, right? When we talk about payments and we talk about money, okay, we talk about three different characteristics, right? It has to be a store of value, okay? It has to hold value, okay? Two, it has to be a medium of exchange. People want to use it as a way to exchange goods and services and things like that. And three, it has to be a unit of account. It has to be a pricing mechanism. Okay, so we're talking about something like Bitcoin. Certainly, it has at this point, uncontroversially, a store of value. Okay, but it's very questionable whether or not Bitcoin has the second and third characteristic, which is, can it be used as a medium of exchange? Can be used as a stable pricing mechanism? As you know, Bitcoin has a very large volatility. So a lot of people think, around the world, different definitions, different regulatory regimes call Bitcoin different things. But more often than not, Bitcoin is classified as a commodity. Okay, because it has a store of value, but maybe the second and third characteristics are not quite so sure, right? So we are in this very interesting period of time. Okay, the most fundamental store of value, of course, is money itself, and now we have, if you look at the UN reports, by 2027, we're going to have $24 trillion worth of digital assets. Okay, to put that in context, that's one fourth of the global broader money supply of $96 trillion. Okay, broader money supply meaning all of cash, all of readily available money across the world is roughly about $100 trillion US in value, and a quarter of that is going to be now digitized potentially a lot of it in this new tokenized form within the next half decade and change. So that's radically fundamental, and we can talk about what that means with the leading digital currency coming on the block, which will be the digital RMB. Yeah.
Thank you so much, Michael. When you talk about in terms of the digital revolution, the first way from the internet to the payment system, the value. So that also leads to my next question that I would ask Bhagwan. You're in India. Now, in India, what is interesting is that in 2016, the Indian government demonetized some of the small banknotes, and I lost some money because I was holding some rupees in the US. Then all of a sudden, after they demonetized, the Indian government actually was supportive of the digital payment Paytm and was skyrocketed. Now it's over 330 million users. Now, Bhagwan, do you think this is a coincidence from the demonetization to the digital payment, or this is a coordinated plan that the government has developed? So what do you make of it?
Thank you, Chris and Michael. Nice to hear you explain the basic concepts. I think the idea behind digitization precedes the 2014 and 2016. India introduced a digital identity back in 2009 called Aadhaar. That was a precursor to everything we are seeing today. So once you create a digital identity for almost all its citizens, it gives a possibility of doing all kinds of things in a digital way. And as Michael said, now we should think about information that was usually stored in physical form now can be stored in digital form. So digital identity is the first step. And then if you think about money, let me tell you what I think money is. It is in its kind of most fundamental form. Money is basically memory, if you think about it. The action is in the real world. Action is in the real world where we are doing transactions, we are writing contracts, we are sort of making deals with each other. But that's very difficult to do because we have to remember what I did for you. So if I did you a favor, Chris, if I can remember that I did you a favor and I demand something in exchange in future, money helps us do that. So money is really memory. And that's what is closely related to information, as Michael said. So once you have digital identity and a whole digital landscape, the fact that we can now use digitized means of storing this memory of transactions and promises you make to other people, to future people, all kinds of digital things are possible. So not just currency, as Michael said, even assets, things of value can be digitized because even those are memory, right? So if I buy a house, how do I lay a claim to the house? There has to be a memory of it. So there needs to be a record of that I own this piece of land. What do? I usually register it and create a land record. Now that's a digitized record, but once it's digitized, all sorts of things are possible. I should be able to transfer it. I should be able to trade it. So we can go beyond currency and actually go into other arenas as well. So coming back to demonetization, whether that was a coordinated plan or not, I don't think it was coordination. I think they have been, the government of India, the new government, Modi government, was thinking about that maybe demonetization is a way to catch some people who are hoarding money by surprise, unguarded. So they went through demonetization, but it created all sorts of other difficulties because, the transaction system was under a lot of pressure. And then these payment companies like Paytm and others were already on the fore. So by endorsing it, they wanted to push it and make that happen a little faster so that the difficulties of removing this currency away and the kind of the difficulty it was causing in the economy could be alleviated. So Paytm became very popular, but India was on its way to really creating a digital mechanism for transferring money, which is called the UPI. So that was not just Paytm. And what you see now, of course, is many, many other payment systems that are coexisting with Paytm. So it's not really a monopoly as one thought it might have been. So yeah. I'll pause here.
Yeah, thank you. So thank you for explaining that the digital payment is actually propel the movement of digitization. I get that. Very good. Now I go back to Michael's point earlier. Michael mentioned that the WeChat Pay and Alipay, they capture over 90% of the market share. If that's the case, they already capture the market. What is the need to introduce a digital yuan? Because it's already digitized to a certain extent. So Michael, I'm curious, in your opinion, why do we need additional digital yuan? Because people are happy with Alipay and WeChat Pay. So is there a need? Is it for what reasons? Can you share with us?
Yeah, I mean, this is a rather sophisticated question because you're right. In places where there are not digital payments, like mobile payments, like I would say most of the rest of the world, there is a big transition from, cash, to some sort of electronic form that could be zapped around by mobile wallets, right? But now in places like China and also now with Paytm in India, we have this. So your question is quite valid. Okay, there's a couple points, right? One is who's actually administering and running the network and backing the digital money. Okay, in Alipay's case, it was a private company called Ant Financial, they basically were the first movers to make that happen in the early 2010s, right? The difference between that and what's happening now with the digital RMB is that the digital RMB is issued by the central bank, the People's Bank of China, which is the authority to create fiat, right? And so it's essentially backed by the central government, whereas technically Alipay's money is not. Okay, so for example, a more practical issue is if for whatever reason Alipay went bankrupt or had a problem with this transactional system, didn't have it mismanaged or whatever, in theory the people's money could be lost completely. Whereas if it's backed by the central bank, it's what we call fiat. It's actually real official money kind of thing. So I think that is a major difference. Functionally, for the people in China who are using their QR codes at stores and zapping money around, there isn't much of a difference. It is in fact all electronic, right? And it is already, money in general is largely electronic around the world, right? If you're making a bank transfer from one country to another, you're not usually shipping big suitcases full of physical cash anymore, right? It's all mostly electronic through what we call the Swiss system, that kind of thing. So I would say one is just who's actually backing it. In this case, central banks. The BIS, the Bank of International Settlements, has done a study, and just in the latest iteration, 86% of central banks now are actively researching their digital currency. So the world has changed. Okay, from a couple of years ago, 2 years ago, nobody in the world would, no central banks anyway, would be really talking about this. But because of, actually, we've been talking about it because of Facebook Libra in particular as a catalyst and what's happening in China as a front runner, I think the world has woken up, and central banks now really view this to be existential, because if these central bankers do not have access or control over their money supply, they lose the plot, right? So I think this is almost a reactionary response to be able to have the world issue their digital currencies for their home countries through their central banks.
Thank you, Michael. So your explanation is fantastic. that means it's in terms of legal tender, legitimize the legal payment now. But then if that's the case, do you think, coming back to Michael again to follow on, do you think that the digital yuan would displace Alipay and WeChat Pay? Because if I use a Chinese digital yuan, I don't need to use the Alipay nor the WeChat Pay. So in that case, would that squash all these existing payments?
No, actually, to the contrary, it's going to make the financial ecosystem more resilient. So, as I mentioned, the duopoly between Alipay and WeChat Pay control 96% of mobile payments. Okay, that's the equivalent if in the United States, Facebook controlled 96% of mobile payments in the U.S. The U.S. government probably would not, be too comfortable with that as a private company, arguably a company that is a little bit more cowboy and invest in self-interest and things like this, to be able to control a major piece of financial infrastructure, right? So you saw what happened in Ant Financial, right? Basically what is happening, okay, is that the government is clawing back control of the financial infrastructure. Okay, so in Alipay's case, it used to administer and do all the clearing and settlement of all the payments across the network. Okay, now that functionality is now reverting back into the control of the central bank. So actually, it's not a question about whether or not the digital RMB will replace Alipay or WeChat Pay. It's more like Alipay and WeChat Pay will be the customer-facing distribution, okay, to the eventual digital currency. But the underlying infrastructure, as well as the form of that money, which is now the official digital RMB, will be the substrate, as well as the implementation of the money that will be flowing across the network. Okay, and the other major thing is, right now, if you go to a Chinese, point of sale in a small merchant, you have two codes, right? You have a WeChat Pay code, you have a Alipay code. Now there's going to be a third code, right, which will be a digital RMB code, and that will allow much more competition. Third parties, notably China's policy banks, right, Bank of China, ICBC, all the big banks, but also third-party FinTech and other types of financial institutions will now all be able to issue their own digital wallets to be able to use the legal tender, which will be the digital RMB, and transact. And that will create a much more robust, resilient financial payment ecosystem, which I think is in the best interest of society.
Oh, thank you. So that means that having this digital yuan can actually entice more market entries that will create a more robust ecosystem so that there will be competition in this market. I think that's fantastic. Thank you. Now, Bhagwan, so if that's the case, in your opinion, do you think the Indian government will also introduce the digital rupees in foreseeable future?
Yes, in fact, they have made announcement that they are going to do its first experiments beginning of 2022. Yes, so the Reserve Bank of India has already announced that they're going to introduce the central bank digital currency. So they're going to introduce it in phases. It's not going to be all cold turkey one day. But yes, the plan is to introduce a central bank currency in India as well.
Well, this is very exciting. So that means that now there will be more fintech companies can enter the market, also try to using this kind of digital wallet now. But then in India, right now, the Paytm is just filed for IPO for over $2 billion. And yet the company is not profitable yet. Then the question is that once they go for IPO, then of course, the underwriter and the executives of Paytm, major investors like Ant Financial would do very well. Now here's a question. Would this kind of growth benefit the wealthy, the rich people? And then would that create a bigger divide between the have versus have not? What is your view on that, Bhagwan?
So I think it is important to understand that companies like Paytm may have started as digital payments companies, but if you do the math, the money is not in payments. And once a digital currency is introduced, payments are not going to be the one that support the value. That's not what it is. What supports the value is information. So the reason Paytm has value, despite the fact that they have not made any profits, is because it's e-commerce. It's the link to e-commerce. That is what the key is. So that's it as a central bank currency, but I also use Paytm, or I use Amazon Pay, or I use Google Pay. Where is the money? The money is because if I use Google Pay tracks what I'm doing with my money. Paytm tracks what I'm doing with my money. And there are the links to e-commerce, which is where the money lies. So the valuation comes from what information I'm collecting about you and other people as a whole, and how much value that is. So for instance, Google knows a lot more about me than anybody else. And Google can take advantage of that because they know what I'm likely to buy next. What is it that interests me? Through my searches, they know, what I'm going to be interested in. And they're going to use that information to target products to me. So the payment companies essentially are going to make money through that, not through the underlying payment system at all. The reason governments, as Michael also mentioned, wanted to introduce governments wanted to introduce this because they wanted to have more control over the money supply, because they've used monetary instruments as a way of keeping track of things like inflation and unemployment and other things. So they wanted to have control over that and not lose the control to this private sector. That is their main reason for introducing digital currency. But I think they will exist side by side. And right now, you don't think of Amazon as a finance company, but it really is. It really is. This distinction between finance and marketing is going to merge. And I tell my MBA students, very soon we are not going to have a separate marketing class and a finance class. It's going to be just one class. It's going to be e-commerce, because all finance and marketing is going to merge.
Well, thank you. So that means that the digital payment itself is not value creation. It's a data that they're bundling with other activities to create value. Now, but that raises another interesting question. That's now I'm going to talk about China. So in China, it's just in recent months, Chinese government's now cracking down on tech giants over the issues about data privacy, data security, and unfair competition. Now, Michael, if this is the case, would that destroy the value of mobile payments? Because Bhagwan is saying that, hey, the value of the mobile payment is on data. If the data cannot be used in certain ways, it may destroy the value data they captured for these digital wallets. What is your view on that?
Yeah, so as you probably have heard, there's been continuing rolling sort of regulatory crackdowns in China. It started first with, notable Ant Financial, but then now it's moved to DD, now it's moved to the education sector, all the way to the gaming sector, et cetera. So what you're really seeing is a response to be able to, start to regulate the big tech companies in general. Okay, what's really notable about the big tech companies is, of course, they have a very unnatural competitive advantage with respect to the data associated with the citizens, okay? And they use that, especially in the financial sector. Why Ant Financial is so dominant is because they have upwards of 1 billion users, and they can use that data to be able to then give other financial services like SME financing, et cetera, which is good. But then the problem really is the policy banks are not competitive because they don't have as much data. And two, the Ant Financial is not being regulated as a financial institution. In fact, Ant Financial notably changed its name to Ant Technology to try to avoid being lumped into the financial sector. Now, at some point, the central government put its foot down and said, okay, well, if it looks like a duck and quacks like a duck, you are a duck. You are a financial services company. You need to have the same, compliance, the same regulatory oversight, the same, leverage ratios. You can't just play outside the system, right? And so I think this is a nice, interesting tension. You see this happening worldwide, notably in Facebook, because of the Cambridge Analytica scandal a number of years ago. You see that governments around the world are very concerned about privacy. In the EU, they have what we call GDPR rules, data location, localization rules, things like this, right? Ultimately, Bhagwan is absolutely correct, right? This is about data and information, okay? In the form of the digital RMB, this is about the central government now being able to track and trace the fund flows and things like this, which will allow much more fine-grained information about the payment situation and financial situation, such that they can enact much more fine-grained fiscal and monetary policy, right? Because now all that data is going to be, the interesting thing about digitization is now you can take that data, aggregate it, you can use big data to figure out all sorts of interesting patterns on that. You can use AI automation to be able to, with smart contracts, be able to deliver the transfer of that value in a much more fine-grained resolution. And so that's very, very interesting. The key part to answer your question, Chris, is that now that data, instead of being controlled by the big tech, okay, is more and more being controlled by the central government itself. Yeah.
Okay, that is about controlling information, controlling data, and also controlling the supply or manage the supply of the currency, as Bhagwan pointed out. Now, so let me talk a little bit about switch gear a little bit towards cryptocurrencies. Now, it's quite interesting. Now we see that different countries, they have different policy over cryptocurrencies. First, in China, just last month, it declared all cryptocurrencies, all crypto transactions, and crypto mining activities are illegal. But El Salvador, the president, Nayib Bukele, just declared that Bitcoin is a legal tender. Now, finally, 2 days ago, the US, the Fed chair, Jerome Powell, declared that there's no plan to regulate cryptocurrencies. Now, we observe different countries that different plans. Who is right? Bhagwan, what do you think? Different countries have different rules. Is it complete ban like China, legalize it like El Salvador, or just wait and see like US? Who is right?
It's difficult to say who is right and who is wrong. So I think something like a private version of transaction will continue to exist because some people don't want their transactions to be seen by the government. So I don't think you're going to see private money disappear ever because if the big brother is watching, I will find other ways of doing transactions. So remember, cryptocurrency is just a way of doing it without any central authority. It's a decentralized method. So it will exist side by side. I don't think it will be the only thing that will exist because a large part of it will still want to use some form of institutional backing, and that's where the central bank controlled digital currency. So I think they are going to exist side by side. They will both exist. I think the private monies will exist, but it will depend on the political situation. If you're in a country where the governments don't have stable policy, you will see more people will move into the private currency. Countries that provide stable policy, more people are likely to use the central bank thing. So I think the ultimate discussion is political. It's not really about money. And just to clear this, the idea that there are multiple currencies is an age-old idea. This is not the first time we have seen many currencies existing at the same time. Even in the same country, even in the United States, we had currencies introduced by several states and they coexisted. And even in the primitive economies, many different forms of money have existed. Even recently, people have used all kinds of things as money. So during the World War, people used cigarettes as money, as a means, because the German hyperinflation was so high, nobody wanted to hold that currency. So people started using cigarettes in prisons, things like that. So this tension between the private and this thing will continue. People are going to move to a way of transaction that solves their purpose. I will tell you, there are businessmen in Gujarat who never use money and they've been very successful. It's their word that, I'm doing this, okay, I'm just going to make a note of it that I owe you money, and there's a network of trust, and that works. Well, what is that? That is money too. So if you go back to my original way of thinking of money, is really memory. It's really a contract that I owe you. And as long as you think like that, multiple forms will exist and people will move to the ones that seems easiest to them. If I'm a criminal, I don't want to be seen by the government. If I want to avoid taxes, I don't want to be seen by the government. On the other hand, if you don't like the volatility as Bitcoin and other things have, then I want something that's stable. So then I'll move to a stable currency. So your question about will digital yuan dethrone the dollar or not? It's not about which one is an easier payment system. It's about which one provides more stability and trust. I think that's what the ultimate game is going to be.
Well, thank you. Now, then I want to turn to Michael. In terms of digital yuan, right? The Chinese government want to crack down on the cryptocurrencies, but we know that in China, a lot of people still like to conduct some private transactions, as Bhagwan pointed out. Do you think that the Chinese government can actually crack down for all these kind of hidden transactions from the government?
Yeah, so I mean, really what you're seeing in China, just to kind of follow on your own question, if you look at the examples that you use, right, the governments that are supporting Bitcoin are the ones that don't have any alternative method of efficient payment system, right? So the smaller countries, the ones that have been financially excluded, the ones that might be sanctioned by the U.S., those are the countries that are now embracing Bitcoin as another form. The U.S. is very interesting. While Jerome Powell says they're not going to regulate, Gary Gensler, who's the chairman of the SEC, views most cryptocurrencies to be securities, and therefore under his purvey of enforcement, right? So I think that's a very interesting thing to note. China. Is really, there's been regulatory responses over the last few years regarding specifically Bitcoin, but then in the unregulated, what we call ICOs, initial coin offerings and things that follow, basically is clearing out the riffraff, right? All the unregulated stuff in China, by the way, there was a huge ICO craze, and there was a lot of MLM scams, a lot of people getting tricked. So I think in China, entrepreneurs tend to be a little bit more aggressive, and so basically they're clearing out all this unregulated stuff, setting the stage for the regulated digital assets. Starting, of course, first with the digital RMB as the reserve currency for them, right? The fundamental base. But then on top, you will see over the next few years, I think China is something to note is that China will be taking a world-leading position on regulated digital securities, regulated digital assets on top. Okay, and this is something that because the Chinese government can tell 1.4 billion people to do all at once, this is going to really be the early adopting case. All the way integrated. Xi Jinping announced two things at the end of 2019. One was the announcement of the digital RMB, which the whole world took note of. But the second, which is just as powerful, is the fact that China is using blockchain technology as the underlying fundamental infrastructures to support all of this, right? So there is a full stack strategy that China's employing, right? Now, to answer your question, there will always be the regulated and unregulated space. Right now, the unregulated space with Bitcoin, this kind of thing, is roughly about a $2 trillion market. Bitcoin itself is 1 trillion, and all of the rest of other cryptocurrencies is another trillion. It's getting to a state of affairs where it's systemic. Okay, and because of that, I think in general you will see much larger regulatory response by the regulators across the world in the EU, the US, other parts of the world. You're going to see that they're going to want to regulate it more. So there's going to be a bifurcation, basically. The unregulated stuff will certainly still exist for people who want more privacy or more control over their ability to transact value.
Well, thank you. So it seems that there are different types of payments, as Bhagwan pointed out, in terms of there could be different types of currencies. Now, Bhagwan, I want to come back to you. Now, in terms of when different countries, you can develop their own digital currencies, maybe digital yuan, digital rupees. In the future, they can do the transactions using this kind of digital currency. As a result, they could actually bypass the SWIFT code, because right now the archaic SWIFT code is really for the international banking, such that a lot of banks can make money off it. Now, but once they do the transaction, the cross-border transactions using digital currencies, it may have a big impact on the bank. What is your view on that?
Yeah, well, that's happening already, and it will happen. So every time, for every transaction, the little transaction fee that these intermediaries made is going to go away. In India, it is for the payments within India, the new UPI thing is already doing it. So the Visas and the MasterCards are basically totally threatened by that. But even at the international cross-border payments, once we have digital way of moving money, being able to make that little transaction cost is on its way out. It's going to disappear.
Okay. So, Michael, I asked Bhagwan's question earlier in terms of the cross-border payments using digital currencies. So in the future, if the different countries can do the transactions through digital currencies, they can bypass the bank. Basically, they don't need to use a SWIFT code, because right now the US is actually using the SWIFT code. They actually benefit a lot. What is in your opinion, what is the impact of this kind of cross-border payment on the banking system?
Oh, this is going to be radically transformative, right? The analogy I like to use, SWIFT, okay, has been around for something like 60 or 70 years, okay? It's really old technology. It's a serial method. It's literally, metadata with people, typing in manually the information, and something upwards of 10% error rate for wire transfers across the network. It's a very old school technology. So I liken the analogy would be like, everybody still using, the postal service, or maybe even more apt, the Pony Express.
Well, thank you. So that means that actually that's the SWIFT code will be on its way out. I think it's finally time. So now I think in real time, I'm going to switch gear to the questions posed by our audience. All right. So let me start with the first question. The most popular question is by Scott McClatchy. He is the UCLA Amber year 2000 graduates. The question is, with the digital yuan introduced in China, along the government's declaring crypto transaction illegal, are the cryptos effectively locked out of China? That means that is really China really banned all the cryptocurrencies or not? Now, Michael is out. So I think, would Bhagwan take the question?
Yeah, so as I said, that you can restrict stuff, you can say it's illegal, but that doesn't mean you are going to be able to stop it. So yes, it is. So here's the analogy I'd like to give you. In the late 1990s, we had this illegal video downstreaming, downloading, where people used to download things illegally and watch videos. But as soon as Netflix and Amazon came in, people say, you know what, it's okay, I can pay $10 a month, and I don't need to. So if you provide a simpler alternative that's legal, people are going to switch to that. So yes, if there's a crackdown on crypto by China and other countries, the use will definitely go down, but it will not go to zero. It will not go to zero. So for those who want the convenience and the thing will stay with the digital currency, but those who want to value privacy or want to stay away from the prying eyes will still use the private method. So you can declare anything you want illegal. That doesn't mean you're going to be able to stop it.
Okay, good. So that means that there will be, because as long as it's private transactions, and you point out, there could be some way, whether you call cryptocurrencies or just like a little script or notes, it still can be a memory, as you point out. Very good. Next up, this is a question for Michael. This is from Troy Gilbert. It's our November class 2022. The question is, do you see the digital yuan will be circulated outside of China? If yes, what are the risks associated with that?
Yeah, so to be clear, right now, Mu Tancun, who's the head of the Digital Currency Institute for the People's Bank of China, explicitly says that right now, the commercialization, which is now slated for the Olympics of 2022, so basically in 6 months, okay, there's going to be a commercial release, and it will be mostly directed to be a domestic affair. Okay, the idea here is to create a more resilient, financial ecosystem and allow monitoring and things like that, tracking and tracing on the mainland. Okay, but of course the follow-on, okay, which they have not projected, but one can surmise, is that they are planning to make this an international, sort of deployment to promote perhaps the digital internationalization of the RMB and things like that, right? There are a couple of points to that, though. Okay, one is when you're talking about internationalization of the RMB in general, in whatever form that it is, it's a much more complicated and nuanced story, right? Because there's something called capital controls, right? The capital accounts to allow convertibility of the RMB in and out of the country is strictly controlled. And that is because if you just open it up, then there'll be a massive capital outflow, and then there'll be destabilizing to the entire Chinese economy. So that kind of opening up of the capital accounts will likely be a process that takes decades, not something that will just happen overnight because now you have introduced a new form of currency in the form of the digital RMB. So the digital RMB is not going to suddenly change the internationalization of the RMB. That being said, okay, there is a potential major use case, which is in trade, right? China is the largest trade partner for most of the world, right? And if at some point down the road, if China wants to go and say, hey, look, here's new technology to allow more efficient transactions, right? And maybe even give incentives to use the digital RMB to conduct trade, then I think eventually that will be a method by which increased trading activity and therefore increased usage of the RMB as a global currency will happen. And I think that will happen in the next phase. Already you see the People's Bank of China starting to test this internationalization of the digital RMB itself.
The digital currencies will be being monitored by the Chinese government. All right, good. So let's moving on. Then this question is starting from Haya Saeed, is a UCLA full-time MBA 2023. So given the digital payments is in data information, then how will the central bank manage the perception about trust and data privacy and for the digital payment adoption? How can we trust the central bank would really safeguard the data? Bhagwan, what do you think?
Yeah, so I think this is a very important question. If you look at what we have right now, we have two extremes. Data in the Western US system is all being collected by private players like Google and Facebook. And they are in some sense have a monopoly over data. China has gone the other way and they said, okay, we are going to crack down on Ant Financial and others. And by introducing our own digital currency, we may take that data thing away from these big technology companies. I think India is choosing what's called the middle of the way. The middle of the way is the following, that data will not belong to individual companies. So data would remain a public good. So what they're trying to do is not have it with the central bank and not have with the Amazons or the Geos of the world. So what India is trying to do is basically saying, you can create individual data, but that will stay private. That will be my own data. But once I aggregate that data, it can still create useful indices for the economy. So for example, if I buy Prozac for my depression, nobody should know that I have depression, right? It's my private information. But if several people in Hyderabad are rushing to buy Prozac, it's useful information that Hyderabad seems to have a big bout of depression and maybe health authorities need to come and do something about it. So I think the middle way allows that. It allows Bhagwan's depressive tendency to stay private, but the fact that there is incidence of dengue or incidence of COVID or this thing, once you aggregate that information, it will provide useful indices. These indices used to be provided by things like IMF and the World Bank, which were really late. By the time the reports came out, the world had moved on. But now we can get this information in real time. And I think that's where India is trying to go. But I won't say we are there yet. I think all these things are still being tested. And Europe is also middle of the way. And I think both the US and China might change their stance as well in terms of how much control they want to have on data.
Right. So it all depends on how data is captured, how data is shared. Right. Very good. Now, this is a question from someone who's anonymous. Now, earlier on, we talked about in terms of the US Fed Chair Powell, there's no plan to regulate the cryptocurrencies. But at the same time, US is also slow in considering digital US dollars. So we did a survey on LinkedIn, and our respondents, 37% think the US will be introducing the digital currency soon because the blockchain is the future. Now, this is a question from a anonymous person. He said, if US is not introducing the central bank digital currency, should we be concerned about losing control about money supply to the cryptocurrency? As you pointed out earlier, Bhagwan, you said that the digital currency is about having some control of the supply of money. Now, if we don't have control over crypto, then how can the US central bank can control the money supply in the cryptocurrencies?
So it's a very, very interesting question. Control of money supply. People think that it's cryptocurrency that has caused central banks to lose control over money supply. But central banks started losing control decades ago. Because what is money? Money is not just your paper money. It's also deposits. It's also credit cards. So as soon as you start introducing different ways of thinking of money, you're already starting to lose control. The question is, crypto will make them lose control even a little bit more. That means they have to be even more vigilant about how to control the supply of money. I want to point people to one of the really incredible paper by Fisher Black, who was a pioneer in thinking about these things outside the box. So in macroeconomics, we talk about the fact that money can be neutral or money is not neutral because it's only the relative prices that matter. Fisher Black basically argued that money ultimately will be super neutral. Nobody will be able to control it, which means the supply velocity of money will be determined by technology and real factors in the economy. By that time, central banks will have lost all their control over monetary policy. But that's not a bad thing. because it just means that you remove some inefficiencies, which is now being managed privately. The government will still have control over fiscal policy. So I don't think this idea that governments will lose all control over economy is clearly overblown.
I see. That's a good point. That's a very good point. Now, so the next question is from Ashwin Chandrasekhar. The question is that India is thinking about to introduce digital currency. Would that be a way to fight corruption? That was the original intent, and also to stop all this tax invasion in developed countries. Do you think that the digital currency will help?
That is their intent, but I think they're going to soon realize that when people want to evade these things, they are cleverer than governments. Usually, innovators and private players are smarter than regulators. By the time the regulators figure out how to regulate, the world has moved on. So I think there is an intent. They want to bring more people under the tax umbrella, but if people want to evade taxes, they will find other ways.
Okay, so I want to ask Michael the same question. The question is that a lot of the time, the digital currencies, even in China, we've been talking a long time, is one to fight corruption and also maybe to fight tax evasion. Would that be effective mechanism, the digital yuan?
Yes, actually, I do think that it will be a better way for the government in general to be able to find out what's going on in terms of payment flows. Of course, as Bhagwan mentioned, people who really want to figure out and circumvent will find other means to do so. But by and large, I think, again, to have a digital currency fully digitize the payment infrastructure and to be able to look at the tracking and tracing of fund flow would be very powerful. The government's already doing it on the mainland. That's one of the major issues. Like, for example, in the mainland, they're trying to promote villagers to stay out into in the countryside and not move to the cities because of urbanization problems, right? So they have huge subsidies to allow that to happen. The problem is when the central government from Beijing gives subsidies out to these far-reaching provinces, they have no idea where that payment goes, right? If it's inefficient, if it goes to corrupt officials, this kind of thing, right? So now with the digital currency, you can literally zap in a very micro, fine-grained way subsidies to the individual farmers, and then you can actually be able to see what the farmers do with that money. So actually that's massively transformative in terms of what's happening. Now, that being said, I kind of want to touch upon the other issue which I think was discussed, right, which is, is this the central government being able to track and trace everything and the data privacy and things like this? I will point out one major thing, okay, which is that the existing financial ecosystem does that already. Okay, whatever bank you're using, if it's part of SWIFT, as part of the international monetary system, is already tracking and tracing your use of funds, right? Any transaction above, say, $10,000 US triggers a regulatory compliance check, right? So I think that's something that's not just China, okay? It's the whole institutional world, and I think it's a reasonable kind of requirement because they need to be able to prevent money laundering and terrorism financing and all the nefarious uses of money that needs to happen, right? So they have what we call AML, KYC, know your customer. They have a bunch of checks to be able to do that. Now, what they don't need to do is when you go to the corner store of your 7-Eleven, know that you need to go, you're buying candy, right? And so, the way that the existing financial ecosystem does this is it controls what we call the on-ramps and off-ramps, i.e. the bank accounts, right? If you get a bank account, you need to go through a KYC. But once you have the money in the bank account, it goes, between different bank accounts and things like that. You don't really need to, care about the issues with that, right? So that's what's happening in the new digital currency world, right? So to charge up your digital wallet by linking it to a bank account, getting money into the system, you may have to go through varying degrees of KYC depending on the nominal amount that you want to transfer and your current situation. But inter digital wallet transfers need not be monitored. In fact, in the design of the DCP, the digital currency, they have what they call pseudo anonymity, meaning I can actually do a wallet to wallet transfer even without the presence of internet, right? i.e. through what we call NFC, near field communication technology. I can, just tap my wallet to your wallet and do a transfer. And indeed, the government in that situation has actually no physical way of being able to track and trace that because there's no internet present even to be able to, record the data, right? So I think there is, that of course is a fine line, and we'll see how the governments around the world implement that. But I would say by and large, there is going to be a regulatory response to be able to track and trace these funds. There's something called the Financial Action Task Force, which is kind of this supranational NGO, which is now coming down with rules on what they call travel rule, i.e., in addition to your digital asset, your digital RMB or your digital payment, making a transfer between digital wallets, there has to be metadata, associated with the sender and receiver, for example, to be able to allow the appropriate regulatory organizations to be able to track and trace the funds in an appropriate way. So you're going to see that happen. So there will be essentially bifurcation, right? The completely unregulated stuff will exist and thrive. Again, already is a $2 trillion industry. But by and large, when we're talking about the larger opportunity, it'll be financial institutions. And again, this is a 100x opportunity with a broader money supply of $100 trillion. That will be certainly regulated, requiring KYC, anti-money laundering, counter-finance, terrorism type, monitoring, and that will require a much higher bar for compliance.
Well, thank you very much. It's really comprehensive, and we can talk all day, all night about this topic. And I want to take this moment to thank both of you for sharing your insight with us. So this evening or this morning, we learned from both of you regarding in terms of this is a digital payment, the digital currency is the progression of digitization of everything. So we got that. And then the digital payments has to be fulfills 3 criteria: the value, the media to exchange, and the pricing mechanism. So I learned that as well. And then Bhagwan said that no matter what you do, it's basically that's the digital payments or other form of transactions payment system will coexist. It's not only one size fits all. And then what is so exciting about it is Michael make a very convincing argument is that this kind of digital payment or digital currency is actually creating a bigger opportunity for FinTech to thrive with a multi payment system such that they have more fair competition in different transactions. So on this note, I want to thank our panelists this morning for joining us to share their insights about the future of digital payment, digital currency. At the same time, it is a privilege for us to have this evening with both of us, and I want to thank to the audience for the privilege of the time. Thank you very much, and have a great day in Asia, and have a nice evening in the United States. Thank you.